I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick.
Thanks for inviting me on, Jim. Always a pleasure.
President Trump has some ideas about tariffs and what they can be used for. What's your take on it?
Well, I'm not someone suffering from Trump derangement syndrome. He has gotten quite a few things done, but this idea about paying down the national debt with tariff receipts, that is the I think his worst idea ever, and I can't think of anything that would be more deflationary.
Well, how would that work?
Well, the budget. The national debt's about $21 trillion, and it's scheduled to grow by $800 billion this year and $1 trillion next year. So before you can start reducing the national debt, you have to put your budget at least in balance. So to do that, we're talking about an offset per annum of $800 billion or more. So, Trump's idea that this whole amount can be raised by tariffs is ridiculous. The New York Times calculated that we would have to impose a 33% tariff on virtually all of the $2.34 billion worth of stuff we imported last year. That's taking the idea that if you hugely increase the price of everything we import, that consumers will still be buying it in the same amount. So the idea is ridiculous, and to the extent that when Trump talks about tariffs, he should just use the correct word. It's a tax. And to tax U.S. consumers, and more broadly speaking, U.S. consumption, sufficiently to bring the budget back into surplus or balance is ridiculous. It's just an enormous new tax, in effect.
Well, does he realize who pays tariffs? It's U.S. citizens.
Yeah, somebody's got to pay it, and I don't even think Trump, no one has illusions about that, because we've had enough tariffs already that most of us have had our prices raised on something that we buy, something that we use. So, and it's clear what's happening in the Farm Belt as well. So tariffs have a direct cost, and, you can't simply count on raising revenues out of additional tariffs, because you're really just imposing a giant new layer of taxes on the economy. I'm not quite sure who advised him on that, or whether he was just shooting off his mouth, but I hope he wasn't serious.
Well, I mean, I understand why you might want to bring back the steel industry, but it takes years to build steel plants. Tariffs aren't going to change that.
Yeah, that's a good point. Even if tariffs are not all bad. And, earlier in America's history, of course, tariffs were very important to protect budding industries, to let them grow. That's, in theory, possible in the U.S. We could revive the steel business, for one. But you understand, as you've just mentioned, that it's going to take years, and it's going to take years of, we've got so much malinvestment in the economy, so much of it is skewed toward glorified advertising firms like Facebook and Google, that there's a question as to whether we've got the diligence and the patience to stick with something that would rebuild our steel industry, while over that entire time we'd be paying higher prices for steel. And keep in mind that when we talk about doing that, just putting a lot of investment into steel production, you're talking about mechanizing the production of steel. So the ultimate solution to bring our steel industry back into competition with China's means we've got to produce steel with even fewer employees involved in the process than China does. So that's I guess you could say, the catch-22 there.
Well, Germany closed down their plants in China, laying off 1 million people who were making Adidas running shoes. They brought the factory back to Germany, and they now employ about 40 or 60 people.
I'm sorry, which industry?
Adidas running shoes.
Oh, yes. I know. Years ago, there was a great story, I think in maybe the Wall Street Journal. It could have been in Atlantic Monthly, but it talked about a huge city that was just geared to producing Nike shoes. It was a factory. I guess the city and the factory were one and the same. And, the shift workers, they packed them 12 to a room, and they work long hours just producing Nike shoes. And if you can't wring enough efficiencies from that kind of manufacturing process to make it as competitive as it has to be, it's pretty amazing. You get some idea, really, of what it takes when you're in global competition to produce a commodity like sneakers.
We'll have more with Rick Ackerman right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with Rick Ackerman. Rick, in this kind of atmosphere with tariffs being slapped on everything, is there a place where a person can take advantage of it?
Well, you can take advantage if you're an American producer. Those are the only ones who enjoy a certain benefit, and you can see where the consumer's concerned. If there is less competition, meaning we're shutting out cheaper foreign imports with tariffs, well, we're going to pay higher prices here. So at a certain level, not the macro level, but at a certain level, we're going to find inflation in goods that we all use and require. So I would say there's no haven from higher tariffs unless you're an American producer that's glad to see foreign competition throttled.
Is America in a position to replace these Chinese goods that are going to be slapped with tariffs, or Canadian aluminum? Apparently Canada supplied 70% of the U.S. aluminum, 14% of U.S. steel, and we're being treated like an enemy.
Yeah, and I understand that Canadians are starting to boycott goods produced with American labels at a retail level. So we're enjoying some of the negative effects of tariffs already. As far as replacing some of these things that we buy, to some extent you can, but the list is so long that there are many things that we get, I'm sure, exclusively from Canada or China, for which there are no immediate replacements. So ultimately, there'll be higher prices and fewer choices.
Well, China's the biggest producer of rare earths. How's the U.S. going to replace those?
There are, I think, China certainly has a deep reserves in those things, but there are alternative sources. They're not immediately developable, But there was some concern initially that China was getting a leg up strategically, that we really couldn't be dependent. U.S. couldn't be dependent on China for rare earth minerals. But that's a problem that's still there.
What about simple things like computer chips? China's the biggest producer in the world, and the U.S. military relies on computer chips.
I'm not sure that poses quite the threat that it's been made out to be. There's no question that we've already been through this with Kaspersky, the antivirus maker, having embedded spyware in their chips. I'm hoping that whatever we buy from the Chinese in the way of microchips, that the supply is pretty well vetted as to backdoor data conduits. So as far as the investment, it takes billions of dollars to get a fab plant working to produce chips. It's very capital intensive, and if the Chinese think they can do it better, I say let them do it. But the trick is for the U.S. to take the money we're saving on chip investment that the Chinese have made for us and put it to productive work somewhere else. Unfortunately, we're putting it to work in companies like Facebook, Amazon, Netflix, and Google. We've got huge malinvestment and so much capital in glorified advertising agencies. So long term, I guess we're not going to reap the benefits that we might from having China put up these billions of dollars just for giant chip fabricating plants.
Was the hope that the tax cuts would go into new production, new factories, instead of just buying back stock? Again, America has our ability to stake out an investment in the future has atrophied somewhat. Entrepreneurialism is very much alive, but you can see that it's the most useless ideas that are attracting all the capital. The entrepreneurs are sort of going where the money is, and these days, nobody wants to produce something. No one wants to get their hands dirty making an actual something or other, a widget. Everybody wants to do something in the cloud, and of course, in that respect, cloud services is such an enormous magnet for capital, because that's Wall Street's story. That's really what's going to, they're putting literally their money on that story is going to drive investment for the next 10 years. The fact that the market for cloud-based computing services, which Amazon completely dominates with Microsoft as a distant number two, that the market is so huge. We're talking about trillions of dollars that even with a dominant player like Amazon in there, there's enough revenues for 1,000 other firms, including Microsoft, that they can all be in there playing without taking market share away from each other. So Wall Street has sort of put up this that somewhere there's a flaw in their thinking, but this is the unlimited revenue stream of the future. So I think we should be we should be wary about where all that money's going, but of course we're the ones who are putting it there. We'll have more with Rick Ackerman right after the break.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, if there is no safe haven, should you just take your money and run away from all the markets?
Well, some people a lot smarter than I, and maybe you and I, have done done that. Some of the big hedge fund players they've gone out of the game. They just can't think of anything that's going to earn them a steady 6, 7, 8%. I'm hard put really to say, well, you should invest in this or that. I still think that U.S. Treasury paper has a big run up ahead, but of course that's going to happen mainly because the economy is in a dumper. There's always the option of picking stocks and putting your money in companies that you understand, not microprocessor makers, but something more along the lines of a fast food chain. If you think they're doing the job and that there's good growth, then by all means that's where you should put your money. But even there, you can see that the obvious places where you're sort of familiar with how the various players, the vendors, how well they're doing their business, it's so competitive in those areas. Our very understanding of how these companies work makes it a very competitive business, like grocery stores for one, because we know we're all very price sensitive. We'll go to the grocer that's providing the best value. So you can see everybody's running so lean on inventories now, and Amazon is working on essentially warehouse delivery of grocery store of produce bin stuff, and that's kind of the final frontier. But there's a question of how far they can go there up against Walmart for one. So it's really it's so hard to find that edge, to find some small company that is going to, at this point, change the world. That's the only way you're going to get rich buying stock, is to find one of these little companies. And to me, it looks like the most leveraged plays will be in that cloud services area.
Does that mean you should really be scanning the Russell 2000 for opportunities?
Oh, the Russell 2000. Yeah, I mean, that's a good place to look. I would say we get a lot of our ideas from services like Motley Fool. They're as wrong. They're wrong as often as they are right. But sometimes, you'll be kind of looking over ideas and think, well, this is a good one. This sounds like a good business, and you could do worse than trust your own instincts about such things.
Rick, thank you so much for chatting with us.
Well, thanks very much again for having me on, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. You're listening to HowStreet.com radio. Any questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.